Hey gang, Akil Stokes here of Trading Powered, and welcome to another live room weekend review. As always, I appreciate you joining me as this video has been growing and growing each and every week, and well, it's gotten to a level that I never expected it to be at. So I want to appreciate you guys that have been sticking with me. I want to say welcome to you guys that are new, and a special thank you to everyone that's going out there on Facebook and Twitter, Google Plus, all the social media sites, and spreading the word by sharing my videos. Now, if you read last week's weekend review, and you know that it was a great week of day trading. We made a killing last, I think it was last Wednesday or Thursday last week at the end of the week, and it was a pretty good week. This week is going to be the exact opposite, as well. My intraday trading just hasn't been that good. It's been a rough go in the markets, and really it's just the reality of trading. It's not always going to go well. But if I had to take a positive out of it, it makes for a perfect time to show an example of why you need to take advantage of the good trades that you do have, and you know how having those profits should make up for your losses. So I actually did a nice little rant in the live room this week that I remembered to record, so I'm going to show that to you guys. But first, I want to talk a little bit about a recent series of trades that we had on the higher time frames. Now, before I get into that, I've been getting some feedback about the email I shared with you last week, where I had one trader talk about making about 516 pips in the last 3 weeks. I had another trader talk about, hey, I've made 600 and something pips in July, my biggest week. Or my biggest month, and July was a very good swing trading month. But I've got some feedback and some questions saying, hey, Akil, is this really doable? Is this out of the norm, or you know, how can I get to the level where I do that? It seems very, very hard. I'm struggling just to make anything positive, just to make a single pip. And my answer to that is, yes, it is doable. And with this example of back-to-back trades I'm about to show you on New Zealand dollar, it proves exactly how it doesn't take 1,000,001 trades to make a good amount of profit if you find high probability setups and you trade them the right way, meaning you follow your ROE, your rules of engagement, and you see your trades throughout the entire duration instead of getting emotional, getting scared, getting nervous, and taking profits out before you should. It's actually not that hard to have that 500 pip month, even dare I say that 1,000 pip month. So I'm going to show you a video again of how it's possible, and actually a recent setup on New Zealand dollar where we did that, and then a recorded video from this live room of a rant I went on about a mistake that many newbie traders make, and then I'll be right back at the end of that for a quick closing session. Now, I mentioned earlier in the video that it's not really hard to have that big trading week, big trading month, especially if you're trading on the higher time frames. And the common misconception is that you need to be following 1,000,000 pairs or be trading a 1,000,000 different strategies and catch every single trade throughout the day to have a 500 pip month, have a 1,000 pip month. And well, that's really not true. You just have to be consistent with whatever your trading plan is. And the example that I'm going to show you on New Zealand dollar is basically a way that many of our traders, especially our syndicate members, made a killing simply by trading advanced patterns on this single pair. And here's what we had. And if you've been following me for the last few weeks, this is going to look familiar. Just bear with me. Use it as another training lesson. But we had back-to-back patterns on New Zealand dollar 4 hour. We started off with a Gartley pattern looking at X to A to B, B to C. Our C to D leg completed right here about 80.45, and then we actually pushed up a little higher. I actually got a higher fill on this around 80.70s just because I was a little late to the party. Again, I've been in and out of town for the last few weeks, so I've missed a few trades. But you can see if I bring in my Fibonacci retracement tool from my A leg to my D leg, that we easily ran down to hit target 1 for about 107 pips, and then target 2s for about 210 pips, and I banked about 317 pips total on this trade with little to no pain. This market essentially just went straight down. So very good on trading psychology. Now, instead of taking my 300 plus pips going outside and screaming I'm king of the world and throwing money places and doing my happy dance, whatever we do as traders after we get that good victory. I stuck with my analysis, and guess what I found next? This C to D leg for our Gartley pattern actually was setting up the beginning of a new advanced pattern, and that advanced pattern is the cipher pattern. And you can see here in orange, we have an X to A to B, B to C, and then a CD completion around 78.10, I think it was. Again, let me just bring in a fib to check this. Yep, right around 78.10, 78.07 for our cipher pattern completion here. Now, once again, I was out of town, so I got to the market a little late and luckily got a better fill. I got filled around 77.73, 77.60, something around that area. But regardless of where you got filled at, you can see once again, this thing ran up, little to no pain, and made a lot of pips. If I bring in my Fibonacci retracement from, again, my C leg to my D leg of my cipher, and we got to roll it with price action, we easily came up to hit target 1, and I got about 111 pips on that. And then this afternoon, we actually hit target 2s for another 197 pips, giving me a total of 308 pips on this trade. So 2 back-to-back patterns in the matter of, we got filled this one end of July, last week of July. We got filled on this one, what is this, the second week of August. So within about a week and a half span, 2 back-to-back advanced patterns on the same pair, on the same time frame, and I brought home about 600 and probably about 625 pips total. Now, of course, there are going to be losses in the market. I'm not just going to take these 2 trades and then close up shop for the rest of the trading month and say, you know what, I had a positive month. There are going to be losses, but the point is, if you can take these type of trades and take advantage of these winners. When I say take advantage, I mean see your targets, your profit targets all the way through, and get a big number like 600 pips off of it. What that's going to do is it's going to allow you to take some losses later that won't damage your overall profit too much. And in this next video, it's a rant from something I did in the live room explaining the downfalls of just that. I guaranteed this though. I guaranteed half of you would have done this. Half of you would have took your target 2s off on this retest. Maybe not half of you guys, but if I'm speaking to a general group of traders, half of that group would have took their target 2s off of this, because you're rolling down, you're like, yeah, woo, I'm the man, called it, look at that, it's going down, 250 pips on the bank for target 1, target 2 is another 150 away, or no, 150 away. I get all the way down to here to 102.93, let's just say 103 flat, it's an even handle, I'm up 300 pips, right? Crazy. I'm going wild. I'm up 300 pips. I'm calling the wife, asking her where she wants to eat. Where do you want to eat for dinner tonight? We can get extra fries with your meal. We can supersize the soda. We can even get a dessert. We're gonna go all out today. All out. We'll even eat in. We'll even eat in. We'll sit in the McDonald's and eat. We don't have to take it to go and eat in the car like we usually do. Because you know what, babe? I'm up 300 pips. And when I get home, I'll probably be up another 100 pips. This is it. Then we finally get this retracement. And we see our 300 pips of profit. Even though it's not really profit, even though we did bank the first half. But a 300 pips of trail profit on second targets. Gets sucked back up to here. And now we're back at 200. And the first thing that you guys are thinking, and I know you are, the first thing you guys are thinking is, I'm up 200 pips. I don't want to blow it. Right? Anybody with me on that? I'm up 200 pips. I don't want to blow it. I should just get out while I'm ahead because this market's probably going to retrace back. And I'm not saying you're like this now, but, think the mindset of, hey, this is the normal trader, the trader I used to be. And then what do? You take your money out. You say, what, 200 pips is better than having everything stopped out for break even. I made 250 on target 1. I made 250 or 200 on target 2. A 450 pip trade on both positions. I'm good. I'm good. I'm the man. Because I'm 400 pips richer than I was 10 days ago, 15 days ago. And then you come back. You go on, you do your analysis on some other pairs. You're riding your high horse because you're the man. You're posting on Facebook. You're going to trading forums, changing your avatar, Forex Beast, Aussie CAD Monster, whatever your name is. You come back to check again. You see the market spiked all the way down to your second target, which would have been at 102, which would have been 400 pips away from your stop. And now you're looking at yourself doing this. You took 400 pips of total profit, where you should have taken 650 pips of total profit. You left another 250 pips on the table. All right, we're gonna call this a cipher, right? It's not really a cipher, but it came close. We're gonna call this another cipher here. Just pretend with me for a little bit. X to A, A to B, B to C, C to D down here. 786. We're long again. We're long again at 101 even. Because you're the man, you just banked 400 measly pips off that big cipher. You're getting involved again. You're buying this cipher up 2 positions right here at 101 even. Stop loss, you're putting them down below 99 even. Let's say 98 70s. So now you're taking this other cipher. You're looking at 101.00. You take a loss on it as you see it go straight down. Looking at 98 70s. Guess what you just lost? You lost 230 pips. Times that by 2 because we're trading 2 positions. If you're going to win with target 1 and target 2, you got to lose with target 1 or stop loss 1 and stop loss 2. So times that by 2 is going to give you a total loss of 460 pips. Guess what, traders? If you're that trader that got excited or got scared, took your money off on that first trade here at 400 pips, guess what? One trade later, you are now at a loss. You won 400 on that first cipher. You lost 460 on this second cipher. You're now down for the month. What happened to that trader that stuck it out? They made 650 pips on that first one. They lost 460 pips on that second one. They're still 190 pips in profit for the month and can afford to get their wife more fries and another milkshake. This is the mistake that most of us make over and over again. This is exactly why when I started trading, I used to win 60 and 70% of the time and break even. Not when I first started trading, but once I got into it a little bit. When I first started trading, I was just losing, except for on a demo account. But this is exactly how you see those traders that, oh man, I got a 70% win percentage. How much you were up for the month? Well, excuse me, what was that? Break even. I had took a few big losses. Took a few. I would have been up, but took a big loss that broke even. That's how it happens over and over again. Over and over again, I'm telling you. So, moral of the story is, stick to your plan. Let those targets work their way all the way out. Because it's going to feel good in the beginning. You're going to feel safe. You're going to feel back in that comfort bubble. But when that loss comes, and those losses will come, you need that full winner to absorb those losses. Trader A, again, down, what did I say, 400 pips? Trader A down 60 pips. Trader B up 190 pips. It's a 250 pip swing. Let's take our first break, and I'll see you guys in 10 minutes. So I hope you guys enjoyed those videos, and I want to end this week's live room review just addressing another question I got through email, and by the responses, it seemed like you guys like when I bring up questions that other traders have and kind of answer them. And this one is more of a story. It's a trader that was a former client of mine, and basically what they said was they started off trading one way, they found something else out there that they thought would be a good trading style. They kind of stopped what they were doing, went to this new style thinking it would be easier, thinking it would free up some more time, and long story short, it didn't work out too good for them, so they went back to their original style. Now, what I want to tell that trader, and I actually already did, and traders out there that are doing the same thing, is there's nothing wrong with that. Trading is a journey, and me, myself, I did the same thing. I started off trading a certain way. I went over here. I went over there. I seemed to try everything in the middle. But at the end of the day, I came back to what I first learned and really focused on that. And, you know, I don't think of doing those other systems or other styles as the waste of time. I think of it as just a time where I grew as a trader, got to experience new things, and really took a positive and took some lessons out of that whole journey. So if you're like me and you're doing that, there's nothing wrong with it. Don't get down on yourself. You know, one thing I tell my clients is you always want to find a style of trading that fits your personality. If it takes trying A, B, and C out to find which style you really like, well, then that's what it takes. I would say this: once you do find that style that you like and you're 100% sure that, hey, this is the way I want to trade, whether it be systems or patterns or trend continuation or liberator, what have you, lock in, focus on that system, and you be the best you can at that specific style, even if it's only trading a single advanced pattern. So appreciate you guys joining me as always this week. I may or may not see you guys next week. I'm actually heading out tomorrow off to Puerto Rico, and then for a few days, and then straight to Trade Empowered headquarters down in Kansas. So I'm going to be on the road a lot, doing a lot of prep work for the upcoming Technical Trader Workshop, which is going to be phenomenal. So we'll see. If I get some time, I'll squeeze one out. If not, then of course you have access to over 90 videos that I've done in the past, so take some time to go through those. But until next time, traders, plan your trade, trade your plan, and good luck with the rest of your trading this week.